thecasesolutions.com. Hey guys, this case is about OC Section 240 Harvard Case Solution and Analysis. OC Section 240 Case Solution. Characteristics of frauds in financial statements. Frauds are very common, and most of the frauds are committed by people who have no intention of following the law. If you observe that a particular bank account has undergone fraudulent activities, you should contact your local police so that they can investigate the case and help you bring the culprit to justice. In order to detect fraudulent activities, you need to understand the characteristics of frauds. These features are discussed below. You should use these characteristics in order to identify fraudulent activities. You may suspect a bank fraud if you come across odd entries in your bank statement. For example, you may find an unknown user in your credit card or routing number fields. Such anomalies can be detected as soon as they occur because their contents will be inconsistent with your records. The first thing that you need to do is to check your credit card statement and other financial statements produced by the bank. If the anomalies are consistent with each other, then this can be a sign of a serious bank crime. Another characteristic of fraudulent activities is the consistent use of different names in your bank statement and other financial documents. For example, you may notice that a certain transaction is recorded under your name, but it was performed under another name. This means that you have never actually owned the property that was sold to you. Such actions are characteristic of identity theft. If you suspect that someone is using your identity to purchase property or engage in other fraudulent activities, you should inform your local police so that they can perform a proper investigation and help bring the culprit to justice. If you notice irregular patterns or unusual transactions on your financial statements, you should contact your bank immediately. Such irregularities will definitely affect your credibility because your statements will reflect what you have actually paid to the bank. If you notice repetitive transactions over a certain period of time, you should get in touch with the Consumer Credit Bureau immediately. Such repeated transactions could mean that the seller is opening a new account in your name, which means that you are indirectly financing the transaction. Frauds in financial statements also reveal the type of business transactions performed by the seller. If the transactions do not match the ones in your bank statement, then this might indicate that the seller has either received payments from a different bank or has created new accounts. You should not allow yourself to become a victim of such crimes, because there are many ways to prevent such crimes and to be safe from them. You should always check whether the transactions in the statement and those shown in your credit reports are consistent. It is important to know the characteristics of fraudulent activities because the financial crisis can cause banks to be more lax with their checks and balances. Even if a bank employee is diligent in maintaining their records, something can still go wrong. Some people have realized that by taking advantage of loopholes in bank statements, they can easily steal from other bank employees and even from the bank itself. A carefully prepared bank statement is the best way to catch someone else committing fraudulent activities. Another characteristic of fraudulent activities is that the transactions are done without proper authorization. This usually happens when people do not have the proper identification or account numbers to back up their transactions. Such actions are often conducted in order to avoid detection. A bank statement can prove that such fraudulent transactions have been done, but the transactions could still be covered with the appropriate documentation. In such cases, it will be much easier to convince the bank to cover the charges. The characteristics of frauds in financial statements act as very useful tools for investigators. They help them in detecting possible frauds and helping them to solve these cases. For example, if a particular bank statement has several blank spaces where money can be withdrawn, the most obvious signs that such a transaction has taken place are the missing checks and the amounts shown on the statement. Such gaps provide investigators with the proof that the process of withdrawing the money has indeed taken place. By using such documents, they can also prove their claims in court and pursue the suspects. Frauds in financial statements are very common, and understanding what these are can help you protect your company. There are 4 types of frauds that can be found in financial statements, with each having a different way in which the fraudster may gain profit. The most common is the misrepresentation or exaggeration of information, where a person intentionally misleads a lender about their capabilities, making them believe that they have greater than they actually do. Frauds in financial statements can also be caused by a lack of reporting or underreporting of financial data, where the company itself becomes the victim. It may be that the accountant does not keep proper records, or the financial statement itself may be faked or altered. If this is the case, then you could have a huge problem on your hands, as serious problems can arise if the company itself is involved in such practices. Other common frauds in accounting include manipulation of numbers. This involves an individual or an organization deliberately overstating their results to gain an advantage, or even in some cases, defrauding investors of their funds. Other techniques of manipulation include inserting transactions that don't exist, freezing accounts, and even using doctored bookkeeping records. All of these tactics are considered to be financial frauds, and can all result in severe punishment on the part of the party involved. If your accounting company engages in any of these tactics, then you need to immediately seek legal advice from a highly experienced criminal attorney who has experience in handling these situations. One other common characteristic of frauds in financial statements is false or inaccurate information. This is perhaps the most prominent, as it can result in severe consequences for the company and its shareholders, and even lead to action being taken against the company. Financial statements must accurately portray all relevant information, including those related to income and expenses, cash flows, and other related financial information. If one party knows of information that is inconsistent with the financial statements, for example, the net income reported in one period may actually be lower than the corresponding period in another period, or the net income in one quarter may in fact be lower than the corresponding quarter in the prior year. This is just a sample partial case solution. Please place the order on the website to order your own originally done case solution. Thanks for watching this video. Please like and subscribe our YouTube channel. If you want any case study, visit our website thecasesolutions.com.